Hi guys, welcome to this Moneycontrol live stream. You're watching Earnings Express with me, Nandita Khemka. Well, the earnings season is on in full swing. We've seen IT earnings, we've seen earnings from banking names, we've seen earnings from FMCG names, but now today we'll be talking about the auto space. Given the fact that we have seen numbers from Ashok Leyland and TVS Motors as well, but of course to talk about what to expect from the rest of the auto pack and whether or not it's going to be a strong quarter or not, I have with me somebody who's been tracking the auto space for over a decade now. My colleague and CNBC TV18 Sonia Shenoy joining me here. Sonia, tell us Ashok
that makes
Leyland.
me feel so old, tracking it
We've
for
known each
over
other
a
for
decade.
quite some time, but
Yeah.
I think we are sharing screen space for the first time ever.
Yes, we
So
are.
that's the first.
Thank you for having me here.
No, you're most welcome, and it's great to have you here. But let's talk about the auto earnings. TVS has come out, Ashok Leyland has come out. Ashok Leyland, great numbers, Goldman Sachs upgrade coming in. TVS Motors numbers were good, but brokerages have retained their sell call on the stock. Tell us what are the trends that have emerged after these two earnings, and then we talk about the entire auto pack.
Okay, so at the onset, right, let me just start by saying that all the auto stocks have rallied quite a bit. Like for example, Tata Motors up 60% this year, Bajaj Auto is at a 52-week high, TVS is almost at a 52-week high. So in that context, the expectations are large, right, and there could be scope for disappointment as well. Something that we saw in some of these numbers, so TVS for example, great set of numbers, very strong, 10% margins for the 6th consecutive quarter, and this was an issue for TVS for so long. They just couldn't get to double-digit margins, but now for 6 consecutive quarters they've done it, and their business is growing at a very fast clip. So iQube, for example, their electric vehicle product is doing very well. They have over 30,000 bookings over there, but the problem for TVS really is, once again, in its price. I mean, it's a good problem to have, but the stock has rallied significantly and is quite expensive. Also, since there's no scope for disappointment, any marginal disappointment is, is seen on the stock. So, for example, TVS Motor has decided to invest in some of its loss-making subsidiaries. Now, earlier that would be, overlooked because the stock was not that high. But now the debt has gone up marginally because of that investment. And because of that, there is a little bit of profit taking on the stock. But having said all of that, it's still a very good set of numbers. So, on Ashok Leyland, the thing with Ashok Leyland is, once again, the stock is up 30% this year. It's at a fresh high, but the CV cycle is coming back in a big way. I mean, you'll see it everywhere, right? Infrastructure is picking up. The capex cycle has come back, so they need more trucks. And hence, the truck segment is doing very well. In fact, the management commentary was very bullish. They said 8 to 10% growth for the commercial vehicle industry, and they will do they will sort of do better than the industry. So, two numbers, good numbers. If you are an investor in these two stocks, no need to worry. Just that you need to keep track of valuations because they're getting a bit expensive.
Getting expensive. Of course, as you mentioned, autos, I think the index is up 24% vis-a-vis the 8% gains that we have seen on the index.
And this is after years of underperformance.
Right? You're right. Let's talk about the entire, the other, auto four-wheelers, two-wheelers and, numbers that have not come out yet. Of course, Tata Motors reports today. But overall, how is the trend expected to pan out both for four-wheelers and two-wheelers? Would you say the PV segment will drive earnings? CV, of course, we've seen subdued performance so far.
Yes.
So
I want to start, it's very stock specific, Nandita. So let me start with Tata Motors because it's a big one to watch, right? It's sitting at a 52-week high. The
60% up this year.
60% this year, right? So is there scope for disappointment? No. But having said that, the numbers will be good. I mean, Jaguar Land Rover has delivered a 30% volume growth this year. It's come back in a big way also because the supply side constraints are easing, the demand has picked up, production has picked up globally. And although the India business is not done that well because Tata Motors for some reason is underperforming in the commercial vehicle sector. Passenger vehicles very good, electric vehicles very good, but commercial vehicles is struggling a bit compared to peers like Ashok Leyland. So putting that aside, it's a good set of numbers, but let's not forget that the stock has also rallied 60%. So in that context, there's no scope for disappointment.
Any disappointment and you see a sell-off.
Yes, you will.
It would be like that.
But the management also has been very optimistic. Last update that they gave us, they said that the free cash flow will be £400 million plus for this year, and that is beating their target. Earlier they had said by the end of the year they'll be free cash flow positive. Now they are saying in Q1 itself they'll be free cash flow positive. So I think Tata Motors is the one I'm watching out for very closely. The other one to watch is Bajaj Auto. Now for Bajaj Auto as well, we have very good set of numbers coming up later in the afternoon. But the thing about Bajaj Auto is that the exports is a bit sticky. In that context, sequential growth is there in exports. It's coming back. So that's something that the street will like. And for domestic growth, it's very good. They have their new launches with the Triumph. They're back in action in the premium segment. So, all of that put together, good set of numbers, 50% profit growth and 30% revenue growth.
Right. Let's talk about, the others, Maruti. We've had quite a few launches from Maruti this year, right?
Yes.
And the recent one being Invicto, I think, which is their first premium MPV above 23 lakhs, so to say.
Yes.
Do you think, this is where the company will gain market share and, earnings will be driven by some of these new launches like Jimny, Fronx, etc. And aside of that, M&M, when it comes to their tractor business, can we expect any kind of rebound given the fact that the rural recovery has actually been a little patchy? It hasn't really been as fast as one would expect it to be. So,
absolutely. So let me talk about Maruti, right? Because all interest lies there. The Jimny and the Fronx, you spoke about that. So just to give you the numbers, Fronx is doing very well. It is selling 10,000 units per month currently. The total booking of Fronx has now crossed about 46,000, and that has led to a good SUV market share improvement for Maruti. So in the month of May, the last figure we have is that the SUV market share crossed 20%, and their target is to reach 25% by the end of FY24. So all eyes are going to be on that segment. The other thing is that the management in their own admission said that the affordable segment is seeing lower growth. So they are expecting just single digit growth in the affordable segment, which is 5 to 7%, but their focus is now on the SUV segment because margins are better there. You have higher realizations from that space. So that's on Maruti. I think there is also a couple of their shipments in the export market were delayed. So maybe that could get factored into this quarter's numbers. But all in all, good set of numbers expected from Maruti as well. For M&M, they are the leaders in the SUV game. They nailed it,
true.
And that's something that you've seen in the stock as well. But I take your point on tractors, and it's a very valid point you made that there is a slowdown in the rural market. The monsoons have been, sort of tricky all over the place. So that has impacted their numbers. So once again, for M&M, the two important things to watch is whether the tractor business can hold on to margins, because some pricing pressure is there because of the slowdown. That's one thing. But on SUV segment, on the passenger vehicle business, is doing very well.
No issues there. All right, we're talking about premiumization, right? Of course, we've seen bike wars heating up when it comes to the three players, Eicher, Bajaj, as well as Hero. So as somebody who's been tracking this space for so long, as I keep mentioning this point, not to make you feel old, but what are you picking up? Is there more tilt towards Enfield? Are people loyal to this brand, or are they looking at a Harley or a Bajaj Triumph for that matter? Do you think these two have the potential to eat into market share when it comes to an Eicher Motors?
So, the Bajaj Triumph, sort of marriage, so to speak, has done very well up until now, right? The new launches, the company had told us that the new launches are really gaining segment. That is the Scrambler 400cc and, the other bike, and I forget the name, but two of those 400cc bikes which have done very well. But the thing is that in the premium segment, Eicher already has a foothold with Royal Enfield. In fact, Eicher is doing the other thing. They are getting into the lower end segment with the Hunter, right? They are looking to get into the mass market segment in a big way. But the interesting part, Nandita, is that after tracking autos for so long, I love driving cars, but I've never gotten my hands around on learning how to ride a bike.
But then if given a choice, which one would you pick among the three?
The Enfield, for sure.
No, there's so many loyalists. I did a video on it, and there's so many comments saying, "Oh, Enfield hands down." I'm not going to even look at the rest of the.
But you never know. There's so many new entrants. I mean, the Harley is always, and the distribution, right? I mean, Hero has a great distribution reach. So if they can crack that, then the Hero Harley marriage could also work in the Indian markets. But for now,
they do pose a threat to Enfield.
Definitely,
loyalists or no loyalists,
definitely.
Right?
And there is a threat to Enfield both from Bajaj Triumph and Hero Harley. And also with the Hunter, what's happening is that because it's a low price product, their realizations are lower, so their blended margins for Enfield could be lower because of that. But they're okay to sacrifice on margins now to up their volume game
later,
because you know that is I guess their strategy for now. But yeah, interesting. Maybe this year I'll get to learn how to ride a bike.
You can teach me also. I've also never gotten my hand on a bike. But with that, Sonia, thanks a lot for joining in and putting things into perspective for us. Of course, I'll see if I can get hold of you once again once these most of these numbers are out of the way.
Definitely.
And maybe we could do a review chat.
I would love to be back here.
Sure. Keep that in mind, and I'll get you back. Don't worry. Well, with that, it's a wrap on this Earnings Express. It was a great chat I had with Sonia on what to expect from autos going forward. But you guys stay tuned to Money Control for all your other news and updates. I'll be, of course, back at 12:30 p.m. With Yatin to get you a sense of how the markets are performing today. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.